I'm Charlotte McLeod with the Investing News Network, and here today with me is Rick Rule, proprietor at Rule Investment Media. Thank you so much for joining me. Great to see you as always.
Charlotte, pleasure to be back with you. Thank you for having me back.
Really nice to see you in person, and of course we're here at VRIC in Vancouver. I want to start off with a quick question about the conference because I know you've been downstairs, you've been on stage. What's the most interesting piece of information you've heard so far?
I think anecdotally, the mood of the crowd is 50-60% better than last year. Upbeat crowd, a much larger crowd. I think it's fair to say too that Jay Martin has really advanced as a conference personality and a conference promoter. I think part of the success of the conference is, of course, due to improved metals markets, but part of it is due to the fact that Jay, after 10 years of doing these things, he's worked a decade to be an overnight success. He's done a great job.
I think he's done a great job. It's a really nice conference this year. And so as you mentioned, this is really busy. There's always a lot to get through here. So I'm going to try to go through a number of topics pretty quickly and try to cover a bunch of ground. I had the chance to go last week to see your presentation at Roundup, where you were talking about how companies can get money from you, which is probably something that a lot of people want to know about. So you mentioned that you're actively looking to write checks, but of course you have a lot of stringent criteria and questions people need to answer. So at the moment, how many companies are really able to meet your criteria?
My shopping list, if that's the right way to say it, that is companies that I really actively or at least nominally follow, or my team follows, is about 150. That doesn't mean that there aren't deserving juniors out there that I'm not familiar with, which is one of the reasons why I come to conferences like this and walk the halls at 70 years of age. There are always opportunities that I'm not familiar with. But the universe of companies below $1 billion in market cap that we have enough information about that we can establish a buy below target on is somewhere between 100 and 150.
Okay, and so flipping quickly through our topics, we have to make sure to touch on uranium. We did discuss it briefly the last time we spoke, and you said it's a place for speculators to be in 2023. Your followers, I think, will know that for years you've been telling us it's the Japanese restarts that we need to watch. This is something that's now happening. So
correct.
Can you give just a quick update on what we're actually seeing there with those restarts?
I think there's three things that happen in 2023 which are interesting. The most important being the pace of Japanese restarts. The Japanese public, as recently as 3 years ago, were 60 to 65% opposed to nuclear power. Recent polls suggest that they're between 60 and 65% in favor of nuclear power. Japan Inc., the corporate interests, and the Japanese government have always been in favor of nuclear power. But post-Fukushima, that opinion wasn't shared by the populace. The consequence of geopolitical insecurity, a fancy word for saying Russia and China, and concern in Japan about particulate pollution and global warming has meant that the population in Japan has decided to permit the restart of the Japanese nuclear fleet. That does two things, Charlotte. It increases baseline demand for uranium by between 10 and 12 million pounds a year. It also takes the remaining unsold Japanese inventories off of the world market. So it reduces supply at the same time that it increases demand. The third thing that happened, I get to take a little credit for. There was a bunch of uranium overhanging the market in the last 10 years. And my former employer, Sprott, bought 55 million pounds of it. Some of the overhang on the world market is no longer available for sale because it's owned by Sprott. So I think the combination of reduced supply, increased demand, and the fact that a lot of the overhang is now in private hands, not available for sale, means that you're going to start seeing price response in the uranium market. You are also going to see a much firmer term market. Most uranium for the last 10 years has been sold in the spot market, distressed sales to the benefit of buyers. The spot market supplies have been increasingly used up, which means that people who want security of supply for nuclear power plants are going to have to go into the term market, which is very healthy for producers.
Okay, and you mentioned at some point now we'll start to see a reaction in the price, and I want to ask you about that because I know among our audience, people who really enjoy uranium, they may have been feeling a little bit disappointed at the sideways momentum. So maybe you could contextualize where we are right now for people who might feel like that.
That's a great question. What happens is that most investors pay attention to the spot price because it's the only price available to them. Increasingly, the market is going to the term, meaning that people are buying uranium in 5 or 6 year term contracts. And those prices are opaque. You can't see them. What happens now is that the median selling price in the uranium business isn't the spot price, it's the spot price plus $5 or $6. So the price that the market is paying for uranium isn't really 50, it's more like 55 or 56. As more uranium goes into the term market, the market will become more opaque, which is to say those private contracts won't be known to most people. But you will also see, I think, the spot price go up. What investors really need to pay attention to, and they hate doing it because it requires work, investors are going to have to start paying attention to the quarterly income statements of Cameco, China General Nuclear, and Kazatomprom, because the realized price that the producers receive, which you'll be able to deduce from pounds produced and top-line sales, are going to be more indicative of the uranium market than the spot market. This is going to bedevil investors because they're used to looking in the Wall Street Journal or some other place and seeing the spot market of uranium and thinking that that spot market price is indicative of something. Increasingly, it's indicative of less and less and less.
Okay, very interesting. I think that's going to be, as you said, something for people to learn how to do.
Right.
Right. So as we're moving on through our journey through all these different topics, I want to make sure that we touch on silver because I know you have coming up the Silver Bootcamp. So what's the key message that you want to get across about silver there?
The primary message that I want to get about to people is if you're investing in something based on narrative, you're making a mistake. You need to understand the dynamics of the market. We did a uranium boot camp last year that was highly successful. We had 3,200 investors, and we didn't say to them, uranium is going to go up. We said, here's the structure of the uranium market. Here are interviews with people who have built multi-billion-dollar uranium companies from scratch. Here are interviews with analysts and portfolio managers who've been in uranium for 20 years. We want you to understand what you're investing in and how to invest it. So in the Silver Investors Bootcamp, we're going to do the same thing. We're going to give people an overview of the silver market from the Silver Institute, where we talk about the uses for silver, the fact that half of silver production goes to industrial application rather than precious metals. We're going to talk about the physical silver market, and we're going to talk about the physical silver market as differentiated from the future and papers market. We're going to have the living legends, which Charlotte, as you know, I always do, where we interview people who have built multi-billion-dollar silver companies, talking about how they built the companies and how the lessons that they learned influenced them as investors and how those lessons might be useful to our own investors. And we're going to have portfolio managers who've invested in silver mining stocks for 20 or 25 years, who've experienced bull markets and bear markets. Importantly, like the Uranium Investors Bootcamp, anybody who pays the tuition to come to our Silver Bootcamp who doesn't feel like they got their money's worth can get their money back. Absolutely no questions asked. Full money-back guarantee.
So it sounds like it's going to be very fact-based if you're getting away from these narrative things that are very common in silver. So any particular, misconceptions that you want to dispel?
No, I think what we want to address is basically investor ignorance. Many silver investors are narrative-oriented. What some of them want to hear is silver's going to the moon. It's going to have a $100 price or a $200 price. I have no idea what the price of silver is going to be. I think higher rather than lower. What I want people to understand is what are the factors to consider before buying a silver stock. If you're going to own physical silver, what do you need to know about storage? What do you need to know about in-system, good delivery silver? There are a whole bunch of people who are interested in silver as a subject, but don't have a factual orientation around what it is that they intend to do with their money. And we believe that we'll have the ability in 8 hours to give people some fundamental knowledge. By the way, don't be daunted by the 8 hours. You will be able to access the course for 6 months, which is to say you can consume it 2 hours at a time and you can refresh your memory at will.
Okay, and we just said that we don't want to be telling people that silver is going to go to the moon. However, I wondered if, just for fun, if you could outline some of the share price gains seen in previous cycles among the silver stocks.
That's really fun. Both the silver and the silver stock price gains. My first silver bull market was 1970 to 1981, the epic. The silver price, if my memory serves me well, was about $1.25 US at the beginning of the exercise, and at the end it was 50. I mean, an epic move. But it was dwarfed by the stocks. One stock, Coeur d'Alene, which exists today as Coeur Mining, a penny dreadful from Spokane, went from 10 cents to $65. Really epic move. The next silver bull market was somewhat more muted in terms of the metal. It ran from about $4 an ounce, where, by the way, nobody cared for it. Nobody wanted to buy it at $4. It went from there to $50 again. In this circumstance, I got to play because when nobody cared about silver, I had the good sense to care. And I helped a couple great entrepreneurs, Ross Beatty and Bob Quartermain, start silver mining companies. One, Silver Standard, went from 72 cents a share to $45. The other one, Pan American, which exists today, went from 50 cents a share to $40. These are the type of moves that one anticipates when one takes both the time risk and the ultimate risk to participate in silver. Of course, you'll remember a couple years ago the incredible move that the silver stocks had as well. A short move, but the universe of the junior silver stocks was uniformly up fourfold in a very brief but very violent bull market. My experience in 45 years or so of precious metals investing has been the momentum in terms of precious metals is led by the fear buyers, led by gold. But when the momentum and the narrative begins to appeal to a broader imagination, the poor man's gold, the low unit cost alternative, which is silver, moves further and moves faster. And the most volatile asset class in all precious metals is the silver stocks. The combined market capitalization of the silver mining equities and the pretend equities, the explorers, is so small that when the generalist investor absorbs the silver narrative, the flow of funds into the silver market can't be contained by the market capitalization of the space. And truly insane things happen to share prices.
Okay, so we've got some compelling reasons that people might want to attend. I want to see if you can just shed some light on a question I've been thinking about in terms of silver. So especially at this event, we've been hearing about, is there going to be a recession, a big downturn, etc. Silver, as we know, has its investment side, it's got its industrial side as well. So what happens to silver in that circumstance? Should we be worried about that?
Yes, we should. About half of annual silver new mine supply every year gets used in industrial applications, which means that it gets used as a reflective on solar panels, as an example, or it gets used in sewage treatment or water treatment. One would expect that in a global worldwide recession, that demand for the goods that are made from silver would decline, and hence silver consumption would decline. One would probably believe, too, that if a recession were accompanied by a liquidity squeeze, that assets which were regarded as peripheral assets, say silver, could be hurt. Investment demand might decline simply because liquidity declined and people were less able to buy it. If the policy response to a recession, I'm not saying we're going to or not going to have a recession, if the policy response to a recession was the same as the policy response to every recession in my lifetime, which is to say a continuation of artificially low interest rates and quantitative easing, the result of that would be further debasement of the currency and ultimately should lead to stronger precious metals prices and perhaps dramatically stronger silver prices. But the question that you ask, which is to say the possible impact of a recession, is something that silver speculators need to keep in mind so they can at least be psychologically prepared for that contingency.
And I also have a question in mind about, silver mine supply, because we know that it's a byproduct of other metals, including gold, but also industrial base metals, right? Copper and zinc.
Correct.
And if you have a recession where demand for those lessens, what is the impact then on?
Well, that's a very good point. If zinc demand and copper demand falter and their production falters, byproduct silver production falters too. A different thing that you need to consider, perhaps I anticipated your next question, is that if you don't begin to invest new money in copper mines and zinc mines right now, the existing mines are long of tooth. They've been producing 30 years, 40 years, in the case of Bingham Canyon, 150 years. Without substantial new investment in the zinc business and the copper business, zinc and copper production are going to begin to falter dramatically in 5 years. And that means that byproduct silver production falters too.
Okay, yeah, no, it's all very interesting and interconnected, I think, and you did anticipate that question quite well. So moving on from silver, I like to reach out to our audience when we're going to talk to you and ask what questions people might have for you. So I'm going to throw in a big one right now at the end because we have a little extra time. People are wondering about your macro view on the economy right now. So let's see if we can briefly wrap up with that.
With the caveat that I'm really a credit analyst, not an economist.
People still want to know.
I'm playing defense.
Yeah.
I've been telling you for a couple of years, I'm liquid, and I'm staying liquid. I believe that if not a probability, there's a strong possibility of either a recession. We haven't had a recession for a very long time, and my memory teaches me that we need one, or a liquidity crisis. There are any of number of things that I think could scare the market. In the event of a liquidity crisis, the prices of other things fall because people are afraid to invest. I would like to have the ability to take advantage of distress rather than being taken advantage of. So I'm playing defense. I'm not suggesting that we absolutely, positively, without a doubt, have to have a recession. I'm not smart enough to know if we will or we won't. I just want to insure myself against that contingency.
Okay, well, I think we will leave it there. Thank you so much for coming on to talk about uranium, silver, what's going on in the markets. We'll leave a link to the Silver Bootcamp in the video description. Great to see you.
Charlotte, thank you so much for having me back.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Rick Rule with Rule Investment Media.